Hello, my name is Kris, and welcome to Personal Financeology, where we talk about finances and technology. Please feel free to subscribe, smash that thumbs up button, and be sure to click on the notifications. When I publish new videos, you will be alerted, and also, please feel free to go ahead and share this content on whatever social media platform that you enjoy the best. Let's start it out with talking about high yield savings accounts for today's topic. And essentially, a high yield savings account will be a savings account that has at least 2% interest or more per year. Now, with any savings account, if you don't already know this because it was something I learned recently, you are limited to 6 withdrawals per month. That's 6 a month. If for some reason you go over that, then there's a couple things that are going to happen. And what that could be is your bank might decide to close your account. When it happened to me, my bank was actually kind enough where they sent me a warning, and I wasn't quite sure, so that's where I started to look into it. And apparently, it's a federal regulation, it's not per financial institution. It's going to be that way for your standard savings account, whether you're earning 0.01%, which is pretty much nothing, or if you have a high yield savings account. So just remember, 6 withdrawals per month. You might be wondering, what are the pros? Why should I open a high yield savings account? Okay, sure, that's a fair enough question. Some of the pros would be that you're going to earn about 20 times more than your standard savings account. That's nice. It's free money. It's liquid, meaning if you need the money, you can access it. It's not in a 401k account where you're going to have an early penalty for withdrawing money. All that you have to do is just initiate that transfer from the savings into your checking, and it's readily available. By having it in a different account, it will make that mental block in your head where it's not as readily available, and it'll keep you from making bad financial decisions. If you go into a store and you're an impulse shopper, but that money isn't in your checking account, it may stop you from making that bad decision of buying something that you really don't need. So that, in my opinion, would be considered a pro. There are some other pros to having a high yield savings account. This is perfect for an emergency fund. You want to have an emergency fund for anything that could occur, such as a job loss, your vehicle breaks down. Those are two examples I can think of off the top of my head. And basically, any goal that you're trying to achieve up to about 5 years, that would be my recommendation. My example here, I'm using my high yield savings account for the money that I'm setting aside for a down payment on a house. All right, now that we talked about the pros, let's talk about the cons. There are no physical locations typically for these accounts. If you're the type of person where you want to meet somebody face to face, then this probably won't be the best option for you. But so much is moving online that it is actually becoming easier. And when I thought about not having access to the ability of driving up to an ATM, I thought this might be a drawback. But now that I've used my account for about 4 months, I'd say I really don't miss it. I've never had the need to drive up to an ATM. Some will have access to ATMs and some will not have access to ATMs. It depends on the financial institution that you set up. And essentially, if they do have ATMs, what it'll be is either it's free, you may have to go inside a brick and mortar store, such as a supercenter, and access the ATM there, but you won't get charged. Or if you do get charged, the account will refund up to a certain amount. So technically you're not being charged, but you do have access to the ATM. It could be a corner store pharmacy with an ATM that you can go into. So there are options out there if you do want to access cash via ATM, and that's great. Now, this will not secure your financial future. It's not a retirement account, and it's not going to make you rich, but it will earn some money. So, in my opinion, I think it's worth it. It depends how much money you have in the account, but if you make more than $10 in 1 year, you will get taxed on the money. You'll receive what's called a 1099-int, and it essentially just stands for interest. So let's say that you have $120 that you earned over 1 year. You're going to be taxed on about $110. It's a small amount. Let's just say it's about 25% that you'll be taxed. You're still going to come out ahead. Why would you want to open this account? That's a good question. First off, it's free. Every account I talk about today will be free. It's not where there's a threshold that you have to hit in order to open the account. It will typically take about 5 minutes to maybe 15 minutes tops. It's not time consuming at all. Some savings accounts with those large financial institutions that you probably are aware of, those big banks, they will actually charge you $5 a month. I've seen that on accounts. I had an account where I was charged $5 every month. So over the course of a year, to save my money in that account, it was costing me $60. Why am I paying $60 to save money? You don't pay to save money. The bank should be paying you because you can bet your dollar that they're going to take that money and they're utilizing it to make money off of your money by loaning that out. There are a lot of options out there right now. So many different accounts that you could open that are considered high yield savings accounts. Now, I did some research here for you so that way you can save some time and energy. And the qualifications for my suggestions were $0 to open the account. Some accounts will require $100 or more, $1,000, $10,000. That's just crazy. No monthly fees at all. No monthly fees. You should not be paying to have this account open. It is FDIC insured. That way you can rest assured and sleep well at night knowing that if it goes belly up, your money will be backed up by the federal government. My first recommendation is Wealthfront. Technically, it is a brokerage account, but that really isn't going to have much of an impact on you. You're not going to notice any difference. Wealthfront also offers some other options. You can open up an IRA. You can do the Roth or traditional. That's a subject for another time. And I know for my first recommendation, I am breaking my own rule that you should have $0 to open the account, but it's $1. $1 is the threshold to open a Wealthfront account. I think everybody should have $1, open the account, and the reason I put this as my first choice is because it's got the highest interest rate that I can find at the current period, which is June 2019. It's 2.51%. There are no monthly fees. The requirement of having $1, I think that's minimal. It's not going to break the bank. It's FDIC insured. My second recommendation is called Synchrony. They offer 2.25% interest rate, which is still pretty good. And it has a requirement of $0. You can open the account and fund it later, or open the account and fund it when you open it. It's up to you. It is available nationwide. There's no monthly fees. It's also FDIC insured. Your money is safe. Don't stress out. My third recommendation would be Ally, and they offer 2.2% interest. There are $0 requirements to get the account open. It's available nationwide, no monthly fees, and it's also FDIC insured. My fourth and final recommendation would be Discover. They offer 2.1% interest. This is the account that I actually utilize, and I can speak to more detail about this type of account. When I opened it, there was a requirement of $0. I didn't have to fund it. It took me about 10 minutes. It was basic information. I fund it through my regular checking. That's the external account that I use. It's available nationwide. There's no fees per month, and it's a great account. My advice is open an account. It's free. Do it today. Most of these accounts don't require you to put any money. So you can open the account and make the decision later if you want to put money into it, or figure out how much money do I want to put into this. Now, it's better than paying $5 a month and losing $60 a year. My current checking account, they give me about 1 cent per month, so I'm making 12 cents over the period of a year. You're gonna earn a significant amount more. It's not a ton of money. Also, if you open an account, let's say how I opened Discover, it's at 2.1% interest. I'm not going to close the account and open up another one with a different institution just because it's 2.20%. It's not worth chasing a higher rate because the difference between 2.1 and 2.2 is so small that it's not worth closing an account, withdrawing that money, transferring it. It's more of a headache, and I want this to be something simple that takes 5 to 15 minutes for you. It should be easy, and that's the point. Easy money, free money. All right, that wraps it up. Thank you for watching. If you find this information beneficial, please make sure to give it a thumbs up. Please subscribe. It helps me greatly. Also, if you find it beneficial, and I hope that you did, please feel free to share the content. If you have any advice or suggestions, tips, experience with any of the accounts that I've mentioned, whether it's positive or negative, mention that in the comments. I'd love to have a conversation with anybody that has any questions. Feel free to message me directly if you want. My name is Kris. Thank you so much for watching Personal Financeology. Take care of yourself.